I would say it's probably one of the turnaround stories of last year, quite frankly, in any sector. We were there sort of at the beginning when you joined. You had a bit of a task ahead of you. You have delivered, certainly in the production numbers, and consistently. So it's great. But I do want to talk about a few different things which are going on. You issued some guidance, which you said you would.
Yeah.
It's modest.
90 to 95,000 ounces at 8,000 ounces a month. It excludes our coarse gold, and we know that.
Right. Okay.
Look, and that's something people should really, really consider. It excludes coarse gold.
Mm-hmm.
It's our first year of total production. We're still fine-tuning everything, if you want to call it that. We're still evaluating, assessing ore sorters. That's certainly not gone behind us.
Right.
We're certainly evaluating engineering changes to the plant. We're looking at several things to upgrade and how we could even increase throughput. So there's opportunities there. But that range that we're putting forward in front of ourselves, it does exclude that coarse gold. So that don't lose sight of that.
Okay, so worth remembering. But in all of that, you've also been producing cash. Okay, you did raise a bit of cash to kind of allow you to put things in place. You're also producing your positive cash flow here. That is going to allow you to do things like the ore sorter, like some of the exploration that you're planning for this year. So can you talk to us about what are your priorities with regards to how you're going to spend that cash? You've indicated $9.5–10 million number on the exploration. I get that, but can you run us through everything?
Yeah, so first, let me just talk about how the cash ended at the end of the year. As we announced, we ended with $37 million in cash. So a huge change, huge shift. We used $3 million of that $37 million to pay down some of our debt, which was really important.
That's good.
In all honesty, Matt, that saved us almost $100,000 in the first quarter just in interest. So that's important for us and for our shareholders. We're going to spend $9 to $10 million in exploration this year. We've already started some of it. We've got a good detailed plan. We've just unlocked an area at Higginsville that has 1,800 square kilometers. We just announced the Fair Play open pit. That's a brand new area for us. It's a kilometer. It's 1 kilometer from our plant.
Yeah.
So we've pre-stripped that. We're actually starting to mine in that. That thing is constrained only by drilling. There's no drilling around that. We did the original drilling here. So the initial grades from that pit look to be as good as open pit at Baloo. And we just got stage 2 permitted at Baloo, right?
Right.
That second stage of Baloo was all drilling that we did ourselves as well. So, and look, there was areas that we had that were discovered, that geophysics. We did that gravity survey. What people have to remember is this area hasn't been explored in almost 2 decades. There's been some drilling, don't get me wrong. Mm-hmm. But whenever there's a royalty of 7% sitting on a project, it's a huge burden for anybody. So previous owners recognize that. Not a lot of people were willing to spend any money or effort in those areas. Whereas after we renegotiated that royalty, we've unlocked a huge jurisdiction. We've opened up an area that was really gridlocked, that was landlocked for a long time under that royalty. So tremendous amount of upside for us to be drilling in those areas. And that gravity survey just discovered a 5-kilometer strike zone, which is just north of our plant.
Right, so let me come back to the exploration bit.
Sure.
I want to deal with the debt element and why companies, why CEOs make those decisions. So you're positive cash flow, which is great, and plus you had some money in the bank, $37 million at the end of the year. You pay down $3 million, it saves you $100,000-ish per quarter. It was a lot of money. But wouldn't it be smarter to kind of keep that money available to you to actually advance the exploration in a more rigorous way? What was the balance off there between saying, well, actually, let's reduce this debt position and actually let's go and drill? Sometimes.
In our case, it made much more sense to pay off our debt. There's oftentimes that I've seen, even I've done actually, paid off debt with equity. We don't want to dilute our shareholders in this case. We can repay our debt while we still have an aggressive drill campaign.
Right.
We announced $10 million. That's the first $10 million in this district in a very long time. That's going to give us a lot of opportunity. And our drill bit will drive our priorities, right? The next drilling will come from this. If we feel like we need more money for drilling, we'll add money. all our...
How? What do you mean you'll add
We'll
money?
add money from our cash flow.
Okay.
Paying down our debt is really important. It's really something we're looking at restructuring it as well.
So let's talk about the debt component, right? So you've got your $35 million, you paid off 3, got 32 left to pay. So most companies would look at that and say, we can restructure this and pay a little bit less over a longer period of time, or we can pay it off, or we can pay it down. I mean, what are the options that you're looking at, for dealing with that debt, and what's the time horizon there for people?
Yeah, so for us, our debt is due in June. We have an opportunity to extend that debt by 6 months just by signing paperwork,
okay.
Or we have an opportunity to restructure that debt,
okay.
Which is something we're strongly considering and working on. In fact, we have had a lot of interest from groups who I've worked with in the past,
right,
who have serious interest in restructuring this debt at improved terms.
Okay.
And don't be surprised if we pay down some more debt this quarter. It wouldn't surprise me that we pay down some more. Everything has to be considered. As you talked about, we have to consider drilling, we have to consider everything and make sure we have that pipeline in front of ourselves and the amount of cash.
No, I get that. I mean, that's your job. You're here to mitigate risk and make decisions on behalf of shareholders. We get that. I say you've had a cracking 2019, end to 2019, and I hope it continues. But again, just to finish off on the debt bit, just want to get all the detail, is some companies would also look at things like standby facilities, because you mentioned something there was quite interesting point, which people may have missed, which was you may be able to restructure your debt on better terms, presumably because the company's in a better financial position.
And also because we've had consistent, sustainable production.
Right.
And another thing, a 2P reserve. That 2P reserve that we put out at Beta Hunt is very critical for lenders. So one of the things we're going to be doing is when we restructure this debt, we will be looking at standby facility. I've had standby facilities in my life in the past, but putting together a $20 million standby facility when you don't need it, is the best way to get it.
Yeah.
When you need it and your back's up against a wall, you won't get as good terms. So for us, we'll be looking at potentially a $50 million facility where we take $30 million and we restructure it.
Yeah.
We have that, whatever group works with us, comes to the cross finish line with us, put another $20 million standby facility that we can use at our discretion when it's needed, for some consolidation, maybe for drilling, whatever we need it for, it's in place when we don't need it.
Yeah, I think it's I think the truism in banking, certainly when I was involved, was when the sun's shining, the banks offer you umbrellas.
Yeah, amen. yeah, exactly.
Right,
We've
so
all been
it's
through
not
it.
something you foresee needing, but it makes sense, and I think it's very standard practice, quite frankly.
Yeah.
Put it in place when you can, because it'll be cheaper. Okay, that's fair enough on the debt side. I think that's well covered, thank you. Can I talk about Morgan Stanley? You renegotiated that royalty with them. It's freed up, as you say, this very large land package for you to go and explore and work out what is there. What are your plans? Because it's a big piece of land.
Look, it's a very large piece of land, and we've actually started with our plan by the drilling from Fairplay. That was our number one priority.
Right.
Followed by the geophysics, the gravity survey we did. We did not know that the gravity survey would unlock or show us that 5 kilometer
What
track.
does it tell you? So what is a gravity survey for people uninitiated?
It's a great exploration tool for us.
Right.
Just to oversimplify it,
Yeah.
it's an exploration tool that targets us for drilling. It's exactly what it does. It gives us some indications on where to drill. The thing that's exciting about this 5 kilometers is that from what we can see and all the historical information that we have, there are no drill holes in this thing. This thing here just lit up in a gravity survey, and there's not one drill hole in a structure that's quite similar to what the structure that the mill was built for. The mill was built for the Trident mine. That Trident mine is just right at the mill.
Right.
That thing, we own it. That Trident mine is part of our land package now. So just north of it is where this 5 kilometer strike is. And look, as a reminder, Beta Hunt is 4.5 kilometers today. And Beta Hunt is constrained by land, not necessarily by geology. So,
Okay, so you're obviously going to just work on work on figuring out, well, you're trying to figure out what it is that you've got there. I mean, this survey is early stage. There's no drill holes. There's not a lot. So that's going to take some time and some money to work out what you've got. And you're going to throw how much money at that in 2020?
So look, we had other priorities that much more advanced than this structure in 2020. And we're going to follow through with our plan.
Yep.
The one thing I'm forcing our guys to do is follow through with our plan. This obviously changes things where we might introduce some holes into this year and change up our plan. Our goal has always been, from day one since I took over, to put 24 months of feed between Beta Hunt and Higginsville into that mill.
Okay.
We have stuck to that. We're going to stick to that. And we had a different set of pipelines, Fairplay being one of them. The extension of Baloo being another one. So right now we've got the extension of Baloo that pushes us to the end of 2020 now. We've got Fairplay coming in. We'll be drilling around Fairplay. There are other open pits that are more advanced, satellite targets that are more advanced than this unidentified 5-kilometer strike. We haven't even given it a name. It's so early. So you're right in saying it's early stages. So
if you want to.
Oh yeah,
that's a great name.
I don't know that, we might call it CRUX, but if it won't be a CRUX thing. It would be a CRUX fault.
That's very good. Very good.